Hi, good morning. This is Mayor Valensky with Driving Markets. Driving will talk about markets. Yesterday was a bank holiday in the UK. Next Monday is Coronation Day, so there's going to be a bank holiday there as well. So there won't be a broadcast then, just to keep everyone up to date on what's going on. Okay, so let's kick off. So yesterday, as mentioned in my YouTube channel and Instagram and on Twitter, that JP Morgan was likely to take over First Republic. That's exactly what happened. JP Morgan took over First Republic Bank. They took over all of their debts, and they took over their loan book, and they took over their mortgages. They also agreed to pay the FDIC, the Federal Deposit Insurance Corporation, $10.6 billion. They also repaid the other banks. Remember, back in February, there was a $30 billion loan made to First Republic by the top tier banks. That paid back all of those loans, which is 25 billion, because 5 billion they gave themselves. So it was 30 billion minus 5 billion from themselves. They gave back 25 billion, and now they've taken control of First Republic. Jamie Dimon said that this is now the end of the banking crisis, and it's all fine. Everything's hunky-dory. It's great. It's not. Okay? No, it's not. It's not hunky-dory, and it's not all over. There are lots of secondary regional banks in the US that are in trouble. Now, why are they in trouble? They're in trouble because they've gone and made loans and financed to companies, businesses that are now effectively suffering from the recession and a downward spiral in their profits and their earnings. Okay, and that is going to come out to bear in the next 6 months to 12 months when those companies default on their loans, because defaults are now increasing. They're going to default on their loans, and they won't be able to support their payments, and that will immediately impact all of those banks that have granted loans and have a loan book to all of the particular individuals or companies over the last few years. Now, those defaults are going to increase as the recession gets deeper, and therefore it's going to put more of the regional banks under pressure. The question is not according to what Jamie Dimon says, which is the crisis is over. The question is, in my opinion, is which bank will be next? Which bank is going to actually default next? And what is the FDIC, the Federal Deposit Insurance Corporation, going to have to do in order to bail them out? Because there isn't any money in the FDIC. The FDIC collects tiny percentages from the banks per year to bail out the banks in the event of a default. But when there's multiple defaults, those multiple defaults are going to be too big for the FDIC to cope with. So it's going to have to it's going to have to then get involved, or the US Treasury and the Fed is going to have to get involved in order to bail out those banks. So we're talking about huge amounts of money. Now, at the moment, the secondary banks, you're talking about probably in the region of $3 trillion just to bail them out in the event that those banks fail in the US. And that's a pretty conservative number. However, no one's got $3 trillion, not JP Morgan, and no bank has got $3 trillion to start bailing out all the banks. So what's going to happen is you're going to have the Fed and the US Treasury coming in to print a load of money, which I've been stating over and over again. That's exactly what's going to happen. So when Jamie Dimon says yesterday that this is the end of the banking crisis, I don't know what he was referring to, but that is definitely not true. Okay, now the banking crisis is going to lead into a commercial property crisis, because as loans become tighter and liquidity becomes tighter, more and more banks are not willing to lend money to the property sector. Why? Because it's going to take away their liquidity. They simply don't have the money. Remember, in times of boom and low interest rates, then the banks are creating money by signing on their ledger a credit amount in order to lend out. However, with rising interest rates, and now banks themselves have a major liquidity issue, they're not going to be lending out to property companies, and that's what's going to cause a commercial property crash. Okay, it's already on the cards that large organizations, warehouses, plants, shopping centers, commercial buildings, there is a contraction of that. There's going to be an increase in default payments, or an increase in defaults on those payments as time goes on. and that's going to exacerbate further the banking crisis, because the banks are going to have less money coming in and going to have to end up setting aside bad debt on money that they simply don't have. So that is going to be a major problem, and it's on the horizon. So take into account that what's happening now with First Republic is only the start of the other banks collapsing. The next bank to collapse, as I've said over and over again, in the US looks like Northern Trust. So keep an eye on Northern Trust. Also, Charles Schwab has had a massive reduction in cash flow and flows in. Moving it over generally to markets. Markets were very flat yesterday. We've got the FOMC meeting today and tomorrow, with rates likely to rise by 25 basis points tomorrow evening. That is most likely the end of the interest rate cycle. However, there is a concern in financial markets that because inflation is so high, they could actually put up rates again in June and another time throughout the rest of the year. So that sent yields up dramatically yesterday on the US 10-year Treasury. So there is a concern that rates will rise further. My opinion is this is more or less the last one, or maybe near to the last one in June. Okay, I can't see the FOMC raising rates any further, even though my opinion is they should. I don't think they will, because they're nervous of the economy and they're nervous of a financial meltdown. As regards gold and oil came off slightly, so it's slightly down to $76 a barrel. Gold's at 1,980. I do believe gold will go up, but looks like it's going to test the 1950 level before moving up from there. Dollar was strong yesterday against the pound, euro and the yen. The pound, as said, is on track to go to 125, 126 and eventually up to 127. So I'm still bullish on the pound as far as a pair is concerned against the US dollar. That's more or less it. Cryptos were down yesterday, by the way. Bitcoin was down over $1,500 yesterday. Again, concerns about inflation and overall economic conditions. This is Mayor Valensky with Driving Markets. Have a good day.